Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special report brought to you in association with ASB. Today we're going to look at the signs coming out of China and talk about what it means for us here in New Zealand, both from an economic point of view and from an interest rate and house prices point of view. I really think it is that important. Now, China over the last decade or so has become very important in the global economy because it's become the factory for the world. American consumers in particular have been buying hand over fist from the Chinese, and that's helped boost the Chinese economy. In turn, the Chinese have been saving the money they earned from the Americans when they sold them all those exports and then lending it back to the Americans so they could keep buying more Chinese exports. And this merry-go-round of money worked quite well for a long time. Americans could feel they could keep consuming as long as they could keep borrowing from someone, and that someone was the Chinese. Not just the Chinese, a lot of oil-rich nations in the Middle East, Japan, Korea, and some parts of Europe were also lending to the Americans, but China was the big driver. And so there's this interesting relationship now between China and America. I call it a bear hug. It means that they're sort of dependent on each other. China needs America to keep buying its exports. America needs China to keep lending it money to buy those exports and do other things. And so you have to watch that relationship between China and America very closely. And when it's in trouble, that's a problem for the rest of the world and for us. Because of course, China now is our third largest trading partner. It's our second largest source of imports and is a major source of our exports, either directly or indirectly. The indirect part is through Australia. Australia is obviously our largest trading partner and our largest buyer of exports. But Australia is increasingly dependent on what's happening in China because China buys all those raw materials, coal, iron ore, from Australia. So when China is in trouble, Australia is in trouble, New Zealand is in trouble. And we got some really ugly numbers out of China last night. China announced that its exports in January fell significantly. We saw a 14.5% drop. Now that's a worry in itself. That's a big drop for China, which had been growing exports of more than 10% a month through the last couple of years. So 14% drop. But the real shock was in imports. China reduced its imports in January by 43%. That is stunning. Now there's a couple of reasons for this. China is starting to consume things in its own right. But more importantly, it has all these factories in China which pull things together, construct them, and then send them overseas. So a lot of what we call intermediate goods. Now what that number says, a 43% fall in imports, is that the intermediate goods going into those Chinese factories are simply just not going there. There's some problems obviously with financing things going into China, and that's caused a problem. What this figure means is that China, as the factory of the world, is grinding to a halt. This is very serious for the global economy. That means, of course, less demand for New Zealand products, and we've seen that today with our Performance and Manufacturing Index showing a record low in January, as our exporters find it more difficult to find people to buy their stuff overseas. It's bad news for the Australian economy, because obviously though those imports into China were coming from Australia, and it means that the outlook for interest rates, if anything, is for lower interest rates globally, given the weak demand coming out of China. In terms of house prices, well again, a very weak global economy will depress demand from everyone as unemployment rises and as economic activity slides. So there we have it. There's the Chinese connection to the New Zealand economy, and we have to watch it closely. In particular, that relationship between China and the United States. A final thing to note, one of the reasons it's worth watching is that China now is very important for America when it decides to borrow money from the rest of the world. China can say to America, don't borrow too much and don't print too much money because we have a lot of our net worth tied up in US Treasury bonds. And we're starting to hear that now from Chinese officials. This is a nervous thing because when those Chinese and US officials squabble over trade deficits and currencies and bond issues, that is a worry for that close connection between China and America. I'm Bernard Hickey. That was a special report on China brought to you in association with ASB.